Matt, good to see you. Today we are talking about 3 ways to maximize your retirement income and minimize your taxes all before you retire. So, of course, I've heard this before. If you don't have a tax plan, you don't have a retirement plan. So, if someone's nearing retirement age, we're going to break down a few strategies they should consider today. And first on your list is Roth conversions. Why is that?
Aaron, if you look at basically, if taxes are going to go up in the future, the
Hmm.
tax brackets that we have right now are set to sunset, I believe, 2026. Historically, when you look at where our taxes have been, we are at all-time lows. And yeah, I like the chart you have here. For example, you mentioned Ronald Reagan becomes president. Back
Hmm.
in the day, he would only do 2 movies a year because after the second movie, his tax bracket, counting the state of California, would put him over 100% in taxes. So, with the spending, with everything going on, taxes are going up. It's better to pay it now.
Yeah. Oof, can you imagine paying that much? All right. Next here, have an RMD strategy. I think a lot of us think, all right, I'm going to reach a certain age. I'm going to start taking those RMDs, but that could leave you with quite the tax burden.
That is true. So the IRA bucket or the 401k bucket is for most people their largest asset. And it looks great on paper, and it is. But you have to keep in mind that's not the net. What are you taking out? I mean, theoretically, depending with state taxes, you're taking out 30, you're losing 30% every time you take some money out.
Mm-hmm.
Take the tax hit now by systematically doing Roth conversions. And that way, when you're older, when you hit 72 or 75, whatever that RMD age is for you, the Roth bucket has no RMD requirement.
Right, right. That's
So
essential.
it'll put you in a lower tax bracket.
And something else you said people should consider earlier distributions before they're even required. Start taking that money out.
Correct. Let's say you retire early, you're living on Social Security, you don't have to take any of that money out just because you don't have to. If your income is going to be lower that year because you just retired, consider systematically doing Roth conversions, and that'll just help set you up for a larger tax-free bucket later in life. I
Hmm.
like the tax-free bucket to be the last bucket that we take money out of. That way, we have a longer time period for it to grow.
Hmm. And another RMD strategy is a qualified charitable distribution. What is this?
These are great. Let's say you have to do an RMD and let's say it's $10,000. If you do it the way most people do it, you're taking that $10,000, you're putting it into your checking account. So now it's $7,000 after all your taxes. And then you're giving that $7,000 to your charity. When you do a QCD, your bank account is bypassed. It's going right from your IRA to the church bank account or whatever the 501c3 is that you want to donate to. So they're getting that full $10,000, but you're also not getting that tax liability. So it's reducing your tax burden, and the charity that you love is getting more money.
Win-win for everybody.
Mhm.
And last, healthcare costs before you qualify for Medicare, which is age 65. I think a lot of people are really surprised at how expensive that is.
You are so right. I mean, I've been doing this for 20 years, and you'd be amazed how many people are shocked at sticker shock. They're used to their employer paying their premium. They
Hmm.
retire early because, man, they deserved it. And they go to back in 14, the Healthcare Reform Act was passed, where now either you work with the state exchange. I live in Washington. We have a state exchange called the Washington Health Plan Finder. Most people use the federal exchange, which is healthcare.gov. The grid that you're looking at here applies to both. Basically, based on your adjusted gross income, you may qualify for a tax credit or subsidy on your monthly bill. It's not something you get at the end of the year. You'll see it on your bill where your premium was $2,000, and that's a real number for someone that is 64, maybe $1,000 per couple or per person. But if you qualify for tax credit, the government says if you're under the 400% of the federal poverty level, we're going to help you somehow. If you're
Hmm.
below the 138, they automatically put you on the Medicaid plan, which is no cost. Long story short, without getting too complicated, because it can be rather confusing, I had a client the other day where they're paying $1,600 a month for their healthcare because they didn't check a box correctly, and they did. It's a very confusing website.
Hmm.
Well, we're going to be able to take that down to zero, and we're going to
Wow.
have a plan that no premium and no copays and 100% coverage.
Yeah,
And
that's such an
that's
important conversation to have. And Matt, I know it's something that you specialize in, which you're just a phenomenal resource. So if somebody would like to talk that through with you or some of these other strategies that we mentioned, what's the best way to reach you?
best ways to call 425-256-3105. That's 425-256-3105.
All right. Matt, thank you very much.
Thank you, Erin.